All right, I think we're live. Guys, Novak News, talking about Sydney's property market.
We'll be back. Topic coming up now.
See you soon.
Whoa, James, Monday evening, 8 p.m. It means it is time for Novak News. Stefan Bubalo. I'm here with James Lamplower, and we are here with an interesting topic. Property market, where's it going? What's the forecast for autumn this year? James and I will have an interesting conversation just prior to coming on this evening. Did a quick search on Google, James, and can you guess what came up? Can you guess?
No, because I bet there was a million things that you would have found on there.
Absolutely. Many things. If you're a buyer right now in the Sydney property market, I'm not even going to just say Northern Beach property market. Yeah. I'm going to say Sydney property market. If you jump onto Google and punch in real estate forecast, you are going to get mixed messages left, right, and centre. The property market's booming. Interest rates are low. The bubble's about to burst. Yeah. Get out while you can, buy while you can before it goes through the roof. What is going on out there in the world of real estate? And that's something James and I will look to hopefully give some insight into tonight as we talk about what the forecast is, not only for our marketplace, but probably Sydney overall, and what's going on. James, how are you finding, look, let's talk about today's market. How did you find the weekend in regards to buyer activity and inquiries coming through on properties we've got?
Okay, so two answers to that one. Level of inquiry has been really, really high, I found, across the board. We've got properties in all sorts of the market. We've sort of got some from the entry level all the way up to your ultra prestige at the moment. So we've got a little bit of everything, and everything is seeming to get a good level of inquiry. Although, personally, at the open homes I ran, numbers were a little bit lower this weekend. I don't know about yours, Des.
Yeah.
A little bit lower, but you can never really find a correlation after 1 or 2 weeks. It takes a little bit more time. What did you find out?
Spot on. And look, I mean, the numbers may be a little bit lower, but it could be attributed to people getting over the Easter break. Kids are still on holidays. So like you said, it's not accurate to make an assessment on one Saturday. But mind you, when we say lower, we're not talking like zeros. We're still talking very, very strong numbers of buyers coming through properties. But look, I guess what everybody wants to know is you Google and it is going to say, there's articles I've read saying that we're going to get 3 years of phenomenal growth ahead of us.
Yeah.
Property market's booming. Obviously, we're quite lucky here on the Northern Beach where we've got such a great lifestyle. But there's a few factors that come to mind with my experience in real estate when we've seen growth markets that have triggered these growth markets. And they come down to a few. I've narrowed it down to basically 3 different principles. One is the access to money. So lending, how are the banks lending, how readily available, how easy is the process in getting a loan or accessing funds, if you can draw down on equity. That is a contributing factor. And we've seen it in the past that when the lenders tighten up, when APRA was in effect, 18 months, 2 years ago, and they put some holds on the property market, it slowed down the property market. So access to money is always going to have a direct correlation to the real estate property market. At the moment, things are pretty good. The banks are they've loosened up a little bit. Interest rates, of course, historically low. So that's the second point that I've kind of jumped to already. Interest rates, you can get 4 years fixed loans. Principal and interest repayments 1.99%. I think there's even options around the 1.89%.
Yeah, that's right.
So very low, historically low. I won't say very low, but historically low interest rates with the accessibility to money. So in many circumstances, cheaper than renting.
Yeah. Well, that's what we're finding. That's what we're finding. Not across the board, and everyone's circumstances are different, but it's been difficult for buyers at the moment. I think we're finding there's a ton of frustration out in the market where people are probably they're seeing prices that are going for phenomenal prices, but it's only phenomenal for the agent and for the owner, the vendor. And there's buyers in the market circulating that are saying, I've seen X property has gone for 200K above reserve, 300K, 400K. But then the reality of that is, where does that leave me as a buyer?
Yeah.
That leaves me with seriously low levels of confidence. I don't know what to expect, and it scares you away from properties that you think are in your range, and they're going for different prices. So it doesn't leave you with a lot of trust in the system at this stage in time.
Yeah.
So as a buyer, it has been tough, but what sort of things can you do, and where do you think that's attributed
Look,
to?
I think you're spot on. I mean, I heard that this weekend as well. There were a lot of people saying they've been to auctions where, you know, homes have sold for close to $1 million above the guide. So we're not talking, you know, 50, 60,000. We're talking close to $1 million above an indicated guide. Now, where I see this coming into play is, look, unfortunately, as a buyer, the marketplace is active and it's quite thin with the numbers of properties out there. If we see an increase in stock levels, and when I say stock levels, the number of homes for sale in your marketplace, I believe that can drastically have an effect on it. When you've got low confidence and an increase in supply, of course, there's going to be a shifting procedure. But right now, without the increase in properties on the marketplace, unfortunately for buyers who are feeling these frustrations, and I feel it with you, I don't think there's going to be a change. Until we see real estate levels of the number of homes available for market increase, unfortunately, that's the temperature of the market at the moment. Now, look, as a buyer, what can you do? Obviously, position yourself as well as you can so that when you do find the right home, you can move as quickly as possible on it. That includes pre-approvals, knowing what your capacities are. Also speaking to your solicitor. Something very valuable in today's market is a solicitor who is on call, that you can call pretty much instantaneously on a Saturday afternoon and get their opinion on a property, can even flick through a contract, because that might be the difference of getting something today or not. But that's a little bit off topic. But autumn, not that far away. Traditionally, a little bit of a slower period as it moves into winter. But from what I'm seeing out there and from what I'm hearing, interest rates staying where they are, the number of properties on the marketplace or stock levels, we haven't seen a drastic increase in those. And I believe that and then of course, the accessibility to finance, I believe we're still going to see a very strong property market, you know, tracking through 2021.
So we haven't really seen a whole lot of change in, you know, those key criterion that you might look at, as Des was saying, about your interest rates, about the low levels of stock. It's a formula for lots of buyers, and, you know, at the end of the day, the bottom line is very happy vendors, because there's a lot of competition for buyers to purchase their property. So it's great if you're selling at the moment. It's difficult if you are looking to buy. But do we see any change in what's going on at the moment? We're seeing forecasts everywhere. Even you know, not the last couple of days, but the last 6 months, they're trying to say 2 or 3 years maybe of this sort of growth at 10+% per year, which is phenomenal.
That's hard to imagine, but
it's crazy.
Hey, look at what real estate's worth today. I remember when I started, you could buy a house for $450,000. And if you were to tell somebody at the time that, hey, your home's going to be worth $1 million, they'd have laughed at you. Now that home's worth $2 million today. So, I mean, it's an interesting point, James, definitely, to see this forecast for the next 3 years coming up. It's big to see. Look, I think, pardon me, with any growth period and any graph, really, when we're talking about any kind of market, there's always ups and downs, and there will be a peak, and there will be a slight fall off as well. But what I'm expecting is there'll probably be a really strong surge, and then as the market does kind of peak, you'll probably see a minor adjustment, and then a new norm, if I can say that. So this is where we are at the moment. We'll get a little bit of an increase, it'll come down a bit, bang, and that'll be your new level of norm. So look, as agents, we like a property market that's stable. Obviously, buyers and sellers can buy and sell, you know, within the same marketplace pretty freely. But at the moment, guys, sorry to say, my personal opinion is that this is going to be a pretty active marketplace and great for sellers still to come.
Oh, I've got a question for you, Stez. What about where did it go? Where did it go? Inside.
It went in the market.
In one has gone to the market. Oh, that's it. So at the moment, the hot property has been houses. It's been freestanding properties. Through COVID, people want more space. They've been looking for a lifestyle change. They're looking for all sorts of reasons under the sun. There hasn't been that same level of demand on your 1-bedders, your 2-bedders, your 3-bedders, and it's sort of progressing up into the hot property being the houses. So, you know, incrementally, what happens with the rest of that stock, do you think, at
Look,
this stage?
you will see those price points filter down. So obviously, as the downsizer market moves, that filters down into price points. But you've also got to identify who's buying and who's selling in these markets.
Yeah.
The one-bedroom apartments have also got a strong influence from investors. And what you've seen and what you traditionally see in a growing market is the capital value or the sale price actually moves quite quickly, quite rapidly, and can increase by, we've seen almost a 10% increase in less than 3 months here on the beaches.
Yeah.
The rents don't follow suit. So as a landlord, phenomenal that your property value's gone up, but that weekly returning rent hasn't. So investors look at particularly the investment style of property a little bit differently in a boom market. They sometimes cash out, but if they're looking at a rental yield, unfortunately that yield gets smaller as your capital value increases. Not a bad thing. So a lot of landlords say to us, "Oh, look, Stefan, James, to our management team, guys, look, the rents, it hasn't gone up, or I've got to rent my property out for less than I did before." That's because the bloke that was renting your property has now gone and got a loan and he can pay the same amount for a mortgage.
Yeah.
But rest assured, the value of your home is actually increasing. Even if the rents come down a little, you're making money because the capital value of your home or of your asset is increasing. So there's a silver lining on that. Sometimes landlords come back and they say, "Look, my rents are down, but hey guys, the prices are up on an asset you're holding." So just something to think
But we're typically on the beaches, and it's different all over Australia, but we're typically a capital growth based market.
Yep.
You have other markets that are based on more of a yield, and we're seeing phenomenal capital growth, but if there is a bit more of a gap there, I don't know, there's a silver lining. They scratch each other's back a little bit, don't they?
What I was going to say, sorry, James, I kind of got off topic, was the one bedrooms, you can find that there's an influence of first home buyers and there's an influence of investors. Your homes, your houses are live-in. Your 3-bedroom apartments are generally bought by live-in, by owner-occupiers or a buyer that wants to live in the property.
Yeah.
And your 2 bedrooms are a combination. I believe real estate at the moment that has been sourced or bought to live in is the most desirable due to COVID, people wanting to get out, wanting to live closer to the beaches. And they're the ones that have really, really taken off. So in regards to the different types of properties on the marketplace, they do filter down in price, but I believe if you own a home that is really geared towards something that you can live in and enjoy, that's going to achieve good capital growth moving forwards.
And I think long term, everyone has different property needs, and the goal is, for the most part, to hold it for as long as you can, unless you're moving, you sell to upsize or whatever the situation is. But people are looking at it as this is the chance to get in before things go crazy. Yeah. And it is a little bit difficult being that buyer, but you purchase it not for today's price, not for tomorrow's price, but you purchase it for what it does for you, for the convenience it might offer your lifestyle, your family. And I think they're the resounding things you have to look at. It's why do I need to purchase a property? What are my needs? What are my wants? And how can I achieve those? And, a couple of years down the line, if you've paid a little bit more, or you think you've paid overs for a property, that all balances itself out anyway. So, I think you have to look at the long-term picture, not just today's sale price and feel burnt by it. If you're able to successfully purchase a property, how beneficial is that for your family or for you, whatever your situation is? I think, they're probably the most important things to look at.
Yeah. Another thing also to take into account, and we hear it all the time, I hear it all the time, are purchasers that tell me they're in the marketplace, they're searching for a property, and they'll say, look, I'm going to wait because as soon as the interest rates go up, everyone's going to be in trouble and there's going to be this flood of property onto the property market. I'm going to pick it up as a bargain. Yeah, great theory. But you have to understand real estate supports a lot of moving parts. It's not only real estate agents. You've got the banking sector, you've got mortgage brokers, you've got tenants, you've got furniture companies, you've got appliances. Yeah. There are so many industries that obviously are related to our business. Mark Novak knows it well. I think he was saying 1 in 4 businesses is somehow related to real estate. Now, would it really be in the state or the nation's best interests to have a crashing property market where so many forms of employment are directly, influenced by this industry? So, look, I understand there's a need to regulate every type of industry, but to see a crash in the marketplace would be almost catastrophic for definitely our state and I would go as far as to say for the country. And it's something the government obviously monitors and looks after quite closely. So that's why I'm also not thinking that, guys, the banks are just all of a sudden going to hike those rates and kick everyone onto the streets. I'm sorry if that's a strategy. Maybe not the best one to bank on at the moment.
Maybe not.
Yeah.
And the system is always being looked at, under a what's the phrase, Sebs? Under a fine-tooth comb. From your financial analysts, from everyone you've got under the sun. But at the end of the day, where the business, the economy, it's all geared in a way where hopefully it's going to be helping the wider percentage of the market.
Yeah.
And maybe I could have phrased that a little bit better, but if they did anything rash, it would have big implications, and they're working on what can be done. And at the moment, it has to just plod on as it is, and we'll probably see that for a little bit longer.
Yeah.
We had an update from the NAB and the RBA the other day, and everything stayed the same. So for the moment, well, I don't think that was said to me, but For the moment, it's pretty stable. It's consistent, and
So it's in the business world's main interest to have a functioning property market. Look, as a buyer, I know this is not great news, but understand everything moves up, everything moves down. James touched on it earlier. You buy real estate, particularly if you're going to live in it, for what it offers you. It offers you a certain lifestyle. It offers you proximity to schools or employment. The reason to purchase real estate, in my opinion, and although it's a factor, should not be a financial decision, particularly if you're going to live in the property. Sorry, if it's an investment property, totally different. But you should look to buy a home, because it's not that you're going to buy and you're going to move out 6 months later. You're going to buy this property. Your life's going to continue to grow and evolve. Your kids are going to grow. They're going to get into one of the schools. They're there for 12 years, in schooling. So in my opinion, go for the home that you like. And over that 12 years, traditionally, and I don't think I've never seen it go backwards. Everybody's always improved. So I know it sounds like we're at the peak, but believe it or not, we'll look back on this video in 10 years' time. I'll definitely say I had a lot more hair at this point. But, and we'll be surprised by the prices that we're talking about.
Yeah, well, you'll say that property that was $450,000, that's now $2 million.
Yeah.
That's going to be a $4 million property, and it's just unbelievable to think, really, isn't it?
Yeah.
But
Yeah. So, I mean, look, property market, for us, James and I obviously a little bit more experienced on the Northern Beaches, a very lifestyle-centric property market, great communities, improving infrastructure and transport links. If you're on the beaches, I think it's pretty safe to say prices will continue to grow. They're not making any more land out here either, so the only way to go is up. Yeah. And even that's not happening that time soon. So real estate in Sydney, I think it's a good pickup. I hope all the other markets in Australia are pretty safe as well. Yeah. But at this stage, it's still moving quite well. And Mark's just sent me through a great comment, which we talk about all the time, is that generally you see a doubling effect in real estate prices. So once that doubling effect comes in, you can pretty much turn around and say, look, there's probably going to be a minor correction. And when I say correction, I don't mean a reduction, but just a leveling and a plateauing effect.
Yeah.
But once it doubles, generally you see that result. It has not doubled yet from where we were 10 years ago. So good indicator based on the history of Sydney real estate. There's still more to come.
And I think something that's quite interesting as well is we're living in a not quite yet a post-COVID world, but the last 12 months has been with COVID as through the lens of borders haven't opened back up yet. Travel hasn't opened back up yet. People are around the world looking at a country like Australia, and I know we say this a lot, but how desirable is Australia? All of Australia's markets have been doing very, very well. The international market gets opened back up, and I think that puts us in another pole position again to continue improving. So it's great for property. It's great for our economy.
I think that's a great point. Something it even slipped my mind is that once the markets do open up and borders do open up, investors are going to be looking for safe havens to invest, their money. And Australia has proven time and time again, even in the eye of this COVID. They use the word pandemic, that it has proven to be a successful market and a safe market. And if we believe that the prices are jumping rapidly now, wait till we open up to the overseas buyers that can come back and put their money into Australia. It's only going to create more competition, for the domestic market. So if you are here in Australia, like all of us, I think it's a good time to jump into some real estate, because I believe that will be driving prices moving forwards as well. The government definitely supports international investment into this country. They obviously benefit from higher tax rates and things like that as well. So great point, James. As the world improves, people are looking to pull their money out of Europe, out of the uncertainties of America, and they're going to be looking for safe havens, like the Australian property market.
And that's it. We've only just passed the brunt of it. So 6 months, 12 months, it's all moving in a good direction for Australian property. So it's an exciting time. For many reasons, and I hope this has helped a little bit tonight.
Definitely, guys, and also if you are an investor again, and your property manager is speaking to you, because a lot of those first home buyers or investors are moving into the purchasing cycle with interest rates where they are. Don't take it as a negative. Your property's making money in capital value. You'll do quite well. In the long term as well. Like Mark's mentioned, Australia with the Switzerland of Asia.
I've not heard that one before personally, but
the Switzerland of Asia. There you go. Oceania. I don't know. Thanks, Mark. But James, anything else to add tonight, mate? It's been a long day for us.
I don't think so. You had a good day?
Great day. More property coming on for buyers in the marketplace. And I think that's an indication of not only our Northern Beaches, but most of Sydney as well.
Yeah, perfect.
Signing off, guys. Thank you for joining us.
Thank you
again.
very much.
Any questions, anything we can do to help you, we're available here at Novak Properties 24/7, 8978 6888. Pop into the office, grab a coffee. We're all free for a chat. Any questions, you don't have to be on the Northern Beaches. If we can help you with real estate, we'd love to do so.
Perfect. Well said.
Thanks, guys.
The gentleman of the industry. Good evening, guys. Thank you.
See you soon. Have a good night.
Cheers.
Bye-bye.